Yes, 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 yes. What is going on? All right, Instagram. We are live on YouTube for better better viewing on YouTube, man. If we're talking about charts, which what Money Flow Sunday service is about. It's about a price movement. This right here is the chart of the S&P 500 in the form of the SPY ETF. This is an ETF that mimics or trades. It's $389.02 for a share. And this is one of the things that we call the wind. And the wind is what direction is the market blowing. And that's what I'm trying to figure out, man, where are we at on YouTube? Hold on, man. What's up, Robert? And what the money flow was about for me was trying to understand the movement of price. And I became obsessed with this idea of the way price moves. And along the way, I kind of realized no one really knows what it's going to do, but there are patterns. There are repeatable, similar situations. There are, some of it's in economic reports or in, government predictions or government interventions. They might lower interest rates. They might increase interest rates. They might do government incentives. They might offer tax breaks. This happens, that happens, it rains, there's a drought, there's a flood, a hurricane, there's a war, rumor of wars, there's a financial crisis, there's a scam, there's a Bernie Madoff, there's all these things are moving the market. And every day when we wake up, there's some headline, man. And price is going to move in response to that, and whatever it may be, and we don't know what it is, but tonight you'll start to see it at around 4 or 5 o'clock every day. It just starts, the drip of information, and that information is digested in price, and it's and you'll see it reflected on these charts, and that's what charts do. This is a window into the movement of how the financial world is reacting to all the news and reports and just day to day, tick, 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 information that comes in, things that have happened, events, catalysts that move markets, that move the price of gold or silver, bonds, or technology stocks or oil stocks or REITs. These things move, or Bitcoin. All of these things move. If you're on my subscription thing on Instagram or in Discord with me in the Money Flow Trading Society, I posted this board right on there. Most of the time I write that shit on paper, but I'm looking at it and I'm always trying to think, what's a good trade idea right now? And you're like, what does that mean? Meaning, what's happening in the world? Where's the price of lumber? Where's the price of Bitcoin? Where's the price of a stock? Where's the price of PayPal or Amazon or Google or Facebook or Snapchat or Spotify or Uber or Lyft, and you can just go on and on and on. Are there ideas? Are there sectors? Do you see something going on in the economy as you watch price? And guess what, man? That shit moves every day, and there's no barriers, and there's nobody to say, oh, you can't do that. Oh, no, you can't buy that, sir. No, that's gone, man. And with a click of a mouse. And so, as I'm in my 30s. I'm seeing that. I'm learning that. I make money. I start putting it into this game and start realizing price moves, and you see trends, and it just goes up and up and up. And then it trends and it goes down, and it just goes down and down and down. And inside of that, it has moments where it stops. And that's what I noticed. And that all of this stuff is happening due to fear and greed, man. And it kind of spins a pendulum around true value at the same time. So this pattern, what you see drawn, if you have my book, The Money Flow, what I'm trying to do is watch price in relation to some kind of fundamental value around this. 1, 2, 3, 4. 1, 2, 3, 4. Where's price? Is it in a stage 1, 2, 3, or 4? And where's true value? Value, the fundamental price. What do I think society will pay for this thing? What is this house worth? What is this parking lot worth? Everything has a value to it. How much are these shoes worth? And people who are able to value things, right? People who are able to value things have a distinct advantage over people who don't understand value. It's just fucking enormous. 353. It's enormous. The difference in earning power between a person who understands value and a person who doesn't understand value. Because as you understand value, you begin to see wedges and arbitrages. And what I mean is you'll see dysfunctions. You're like, wow, I could get these for how much? Because over here, I think I could sell them for this much. And if you understand that simple concept of it's this, but it could be this, that difference is margin. Margin is what's called profit, right? So these aren't wages. This isn't wages going up and down, man. This is human emotion of people. These are things of value. We take something like, look at AT&T just recently. I mean, it was just $14.50. Now it's $18. $18, man. Look at that. Look at that. You want to buy it for 18 or you want to buy it for 14? Which would you rather pay? A lot of people don't want to pay 14. A lot of people wait and then they'd rather pay 18. You know, and you say, well, you're looking back with perfect science. I know, but we had this one recently. Look at Gilead. Look how fast Gilead went up. Look at this. Price explosion. Not that long ago. I mean, it was this $57. Before that, I mean, it had come off a big slide and got all the way down into, I don't know, $56, $57. And then now today, we're at $79. How is it possible? This is because, well, the company was worth more down there then. That was our catalyst for buying it. It was undervalued. It's something we read, researched, went and looked. Other people agreed, experts. Now, does that mean it's going up? No, that's the thing. Things don't trade to their true value. That's why there's opportunity in the market. Sometimes people say, well, houses are too expensive in my area. I know, because you don't know how to get houses. You know, but there's other ways to buy houses, man. You could aggressively look for them, and then a couple different ways. You could not only that, but you could knock doors, walk, look up distressed property. Like you could push on that, right? You could learn, you could do that, man. Because something's always working. And the same in the stock market. And if you looked at I can't post it on here, but if you look on Discord, if you look on my story, if you're on subscription with Instagram, if you look on the story, you're going to see where I posted it. Like these here, we're taking profits here. Why would I be taking profits here? Remember, this is, if we look back at what we do with the money flow, what I'm trying to do is gauge value of the company. If it goes into a stage 3 where it's over, now it's gone past the value of the company. All right, good. That's good, but let me get paid. And then if it wants to keep going, great. But I need to buy some other shit that's better value. But I'm watching Barron's this weekend, and they recommended that you buy this stock. And I have a lot of respect for Barron's, but their expert said, man, you might want to check out Gilead. Here, it's $79 when the RSI is 83. Yeah, I wouldn't buy Gilead here. So if we go look at the true value of Gilead, I bet it's right around here, man. It's right around here. So as we're watching the money flow, and we know prices swing from too low. The reason we were buying Gilead, it was priced too low. It had a 5-something% dividend yield. So you got paid to position trade this. This is successful position trading, meaning I have a position in this stock. And what I'm looking for in this stock as I hold my position is these. So I'm watching the money flow, price move in and out, and it moves up, and you're like, okay, is it above the 20, below the 20? I don't have, my reasoning is I'm looking to catch this apex. All of these, I want to buy these ones. That's trading around a position. And then what? Well, I want to sell it to the people that now want to buy it when they want to pay over value or near or true value. I don't want to pay that. That's who I want to flip them to. So I want to downsize the position into true value, right? I want to take some of that off so that now I have gains, I have some profits, and I'm going to keep this company. I'm going to get a dividend, but I'm going to take some of these gains and look to put them in maybe where I think I could get a better return. Not to say this can't keep going up, but let's take some down. And this is what it looks like when you take some down. So if you have the money flow, if you turn in the book to let me see. $127, lock in profits, putting money in your pocket, RSI. This is what it looks like. We've had a couple more. Now these came out of nowhere, man. Where are the others? Merck. Right? So look at price, $100. Now, Now, a little article on them caught my eye. What's up, guys, on YouTube? Hope you can hear me, man. Man, look at this chart. Look at this chart on Merck. I don't have Morningstar up. If somebody have Morningstar up on YouTube, what do they have Gilead's true value at? What do they have them at? It's got to be... Now look at this one. Watch on Merck here. We got our sideways, right? Got our price breaking above the 20. We got our run up. RSI goes extreme. Now, what I anticipated doing here is going sideways. Now, if it wants to run, run. If let's say they say the true value's 200, I don't know. I'm making that up, but I might not trim as much here. I might trim less. But what if they say the true value is like $104? All right, I'm going to take this down, man. I don't mean all the way down. I just mean I'm going to take some up. Man, you hear the sirens? Man, New Jack City, baby. Man, if I get shot during this live, I'm going to try to turn it off. I think that would violate it and I'd be demonetized. $75. Thank you, sir. 77. Yes, if I'm taking out on this, man, I don't know, man. Yeah, stage 3. So as I'm watching this, that's what I'm thinking. Stage 3. Now, if when I go, hey, check Merck, and they say it's $200, I may not take as much off, man. Meaning we still got a ways to go. In other words, you can have a stage 3 and still be 20, 30% under true value of the stock. So as you're looking big picture, as you're thinking big picture, you're like, okay, how much? Meaning, let's say it's Apple or Tesla, and it's probably going to continue. Then you might not take as much off, right? Or maybe it's not, and so you take more off, or you take it down to half, or whatever, and then now you have money that you can roll forward. You can look for better opportunities. Now, if it's still undervalued here, then it may be the better opportunity. Maybe you don't take any off. But that's your research, your belief system, your thoughts on the company or the stock. Recent example, AT&T. I'm not selling any AT&T, but I didn't even have it on my list today when I posted it as candidates. ConocoPhillips, those 70 RSIs, Kraft 70 RSI, Campbell 70 RSI. So Amgen, 70 RSI. Well, there was a whole stack of them. I had them on the list in there. But which ones aren't? Hanesbrand's not. Welltower, VTR. There's a handful that aren't. And so, do I want to take some of this down? Me personally, no. It's still undervalued. Shit, let it come back. I'm looking to buy more, but I'm not buying here. I'm not buying after this big ass run. And now everyone's like, oh yeah, AT&T's a good stock. It's like, yeah, okay, now after it's gone up, but down here you didn't say that, or did you? So, but if you did, then maybe, and if this was a trade, then that would be different, right? So if we were trading this, and I'm looking at it from the money flow perspective, right? What am I looking for? My anchor point? I mean, I'm always looking for the lowest low. We had one right here. Yeah. We had a buy right there. Man, this is a nice example of that, what I talk about back in the box. Look at this. So we had a little box here. That was a buyable bottom then. If you look up, RSI was extreme. I would have told you to buy this, right? It's under the 200-day moving average. It has put in a low, meaning price hit a low and then came back up and then held it for 4 days. That's all I need. That's all I need if I'm watching this and I'm looking for target buy zones and price comes way down, gets into extreme. The RSI is extreme. It's gone way down. It's below true value. You use what source you want. I use a couple different ones. Sometimes I just use my own, meaning I'm like, man, that shit's going to be worth money. And I buy shares like an Uber. It's a complicated business model, and some people like it and some people don't, man. But if they pull it off, then it could be big. And sometimes smart, crazy people pull shit off, and that's called investing. And you put money in it, and you give it a chance. And so you got to have stuff like that. And I use this. So as I formulate that vision of a big idea, what is a big idea? Uber and Lyft, man, these are big ideas. Airbnb is a big idea. Tesla's a big fucking idea. Okay? Roku, big idea. Fucking PayPal. Like all these things are just ideas. One day a guy had an idea and then boom. Right? Pillar number one, how you think is everything. And one day they thought some shit that may made billions of dollars. And guess what? When they go public, they bring it on the stock market. And that's this. We're looking at other people's big ideas, big businesses. And what this is gives us light or picture, vision into price movement. That's what charts do. These are so beautiful. This is fucking art. There's a lot of people, they don't know what this is. They are ridiculously poor people. Everyone I meet ever, and I have some good friends, they don't know what this is. Ain't got no money. Or very little. What this will do is help you preserve and keep your money, man. That's what things like this is AT&T, man. So this was a failed stage one, right? Fell down, did what? Put in a new bottom. And then what? Price came up 1 day, 2 day, 3. Oh, shit. I ain't even got to wait. It's crossed the 5. We're back into the box. If you've ever heard me talk about that, meaning a pattern is broken and then it comes back into that pattern, which was that little box in there. When price did that, that was a signal. So if I own this, that's what that's doing, man. And the only people that see that are people that are looking for that, man. And so now what? Well, if you were trading and you see this setup, you're like, whoa, that's back in the box. Is it AT&T? Fuck it. Let me buy 15,000 here, put a stop here. If it doesn't work, they're going to give me 14,500 back. That's trading, by the way. You see that, right? I don't know what numbers. But if you're watching and you're looking for undervalued assets, well, one thing is, just as a general rule, when something's below this gold line, the 200-day moving average, it's undervalued. Okay, just as not always, but if you were flipping through the MLS, you're looking for certain things. This is a certain thing, meaning price is below this yellow line. That line is a 200-day moving average. The only reason that's important is it's important to banks, institutions, hedge funds, mutual funds, people that trade for family offices, for banks, for private investment groups, equity fund, they look at this line, okay? All your broke friends, they don't know what it is, but these banks look at it, insurance firms, people making shit tons of money, they're looking at this because they need to store their money too. And if you start watching when things that are really valuable get too far down, sets up these buying opportunities. And that's what the money flow lets us do. Now we got to pick what's the valuable thing. This is AT&T. So as I watch it from the belief of the money flow, that price moves, not what? Moves in 4 stages. But 4 stages is what? Price can only do 3 things, man. Go up, go down, go sideways. That's it. But the sideways can come different ways, meaning when it was going up and stopped, then it went sideways, then it could go down and stop, and then it goes sideways. And that I began to call the money flow. Price moving in and out, in and out. That's the money flow, man. And as they move, and the fancy names is accumulation, meaning price stops. And it stops because people begin accumulating. So accumulation. And then as it hits that apex, and then it waits. It stops. And these corner points, we can identify those by a technique I call anchor points. And an anchor point is defined over a period of series of bars or candlesticks, meaning as they print on the chart. So right now on Friday, this was a printing. This was price recorded in history forever, man. You can't fucking change it. When you're dead, they're going to be looking at this. They won't even remember you. This, they're going to remember. And you're like, what do you mean? Meaning millions of computers every day are going to wake up, man. And they're going to look at this day. And it's going to be calculated. And you're probably thinking again, what do you mean? Meaning, look, man, forever. So if I come over here and click weekly, I hit the button, right? There's people looking at weekly charts. People looking at monthly charts. It's recorded forever, man. This game is bigger than you. It's bigger than me. It could take all your money as if you don't even exist. It just suck it up. The money inside of the stock market, in these equity markets, in the crypto markets, and Forex markets, and all these markets is just unfucking limited. 410. So as there's people who spend a great deal of time, effort, and energy trying to figure it out because the money is unlimited. It's unlimited. There isn't someone standing over there going, hey, you see that dude Roberto? Don't give him any money. That's not how this game works. So if you're positioned on the right side, and let's say, I don't know why anybody would do this, but this is what I mean. Let's say a guy bought 150. What would that be? Yeah, so we'll keep it simple so the math is simple. 15,500. It's now what? 18,840 or 48. 18,048. What's the difference there? Like $3,000, right? All right. Now, side note, one of the things I do inside of my portfolio is I'll decide what is the size of a core holding. Let's say it's $10,000. And once it starts dropping under $10,000, I buy a little. And then when it gets to running, when it starts to run, it's going to go from like $10,000 to like 11, 12, 13. And then we're going to downsize it, right? So that's how I do oil. Like I've owned Exxon for 13 years. I add and take down based on what I'm seeing, based on opportunities that are in front of me while trying to maintain and hold a core position in that. So I've owned AT&T literally 20 years, I'm thinking. I mean, this is one of the first stocks that I remember buying. Now, I didn't play it right like I teach today, telling people establish a core position. I mean, there's dudes they're 26 years old. They're doing core positions in AT&T, got 5, 6, 7, 8, 9,000. You know what that is in 20, 30 years, man? And you've got 30, 40, 50 of those. It's fucking millions of dollars is what happens. And I know a lot of guys that have 20, 30, 50. I got a buddy who's got $180,000 of AT&T. $180,000 in this one stock. I knew a guy at work there had $325,000 in AT&T. Would you like that? Most people, if you gave them that, sell it fucking immediately. They couldn't hold that, man. They can't see themselves as a guy that has a $325,000 stock position. They get rid of that shit so fast. That's what would happen, man. You let a guy inherit 10 homes. First thing they do is look how many they could sell. Where do you think a lot of cheap property comes from? Death, divorce, disease, disinterest. Same thing in stock market, disinterest. Prices, there's a social agreement. I talked about my new ebook, The Two Selves. The price is an arbitrary social agreement. Right now, it moves based on fear and greed. Housing prices move based on fear and greed. There is an underlying true value, and that's the pendulum. So this is the pendulum. You see this yellow line, and price swings from above it to below it, way up above it, and then back again. And as it does that, it moves in this pattern, man. And if I can watch and get an understanding of what I think or perceive or what I believe to be value, then I can use these technicals on these charts to give me clear insurance. It's like, hey, when's the best time to do this, this, and this? Because if I consistently do that over many, many positions, consistently, bam, 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 what happens in 5 years, 7 years, 10 years, 20 years? What happens, man? It's fucking compounding. It's what happens in that. And then inside of that, trading, that would be up to you. How much you want to trade? What do you want to do, man? Some people play for big money. I guarantee you there's people that made millions of dollars on this. Just this right here. You might be like, no, that ain't possible. Bullshit. This right here. I bet somebody made $1 billion. I bet somebody, I don't know who. I bet if we go look and see who was the top holder, or what if you bought it right there? Bam. Now the asset you own, look how far it went up, and they're paying you a dividend. And what if it never goes that low again? Think about it. What if this was the low for the next 5 years, and I'm just making this up, and I'm saying, say a guy bought $1 million of it, and that's the low for the next 5 years, and this thing just drifts up, and it gets up into the 27, 28 range, right? He's up 20, 30%, and it throws him dividend, and it's like, bam, thousands of dollars, because we said how much he bought. It'd be thousands. And then it stays there, floats around, maybe pulls back, right? Does the pullback, but it never goes back to that price again. And then it takes off. What's the return on that? It's fucking infinite, man. And that's how that game works as time progresses. And you don't have to die broke. I talk about the business cycle being 5 to 7 years, And yeah, during those cycles, asset prices will reset. The valuations will reset. A beach house might be worth this year. Next year, shit, it might be worth, you might be able to get it for $40,000 cheaper. And then 3 years later, it takes off again. And now you look back and you're like, God damn, remember when it, man, that's how that game plays out. And people who are in that for cycles and cycles and cycles and cycles, accumulating, diversifying, taking some gains, buying this, setting that, people that are actively doing that over cycles, 5, 6, 7 year cycles. And those cycles also kind of go around the Federal Reserve. There's other issues, and it's not just the Federal Reserve. There's actual problems in the world, man. There's actual shit that happens that the president has zero control over, and we just deal with it, man. Storms, wars. Nobody could stop what happened in Russia, man. Right? If you owned a bunch of Russian stocks, just like that, you wake up, black swan. Just like that. That shit happens, man. That's part of the excitement of the stock market, man. You get to participate in the history of this, man. And your knowledge, your natural gifts, shit. I met a guy the other day, he's a chef. I'm like, you own any food related stocks? Because we were talking about stocks, and he didn't know what stocks to buy. And I'm like, there's all kinds of stocks around your business, man. What do you mean? Restaurant stocks, there's, the people that provide the ingredients. There's REITs that own the buildings that they're in. There's REITs that all they do is buy properties for like Cracker Barrels and fucking, all that stuff. Like the gas stations you see on the street, like they work with CVS Pharmacy, so CVS Pharmacy doesn't have to own the property. There's REITs that do that for Walmart. There's like anything you're doing to make money, there's a publicly traded company there making money. And once you take your actual applied knowledge, the shit you know how to do, the cash register you use, the clothes you use, the dry cleaners you go to, the street you drive on, the house you pass, the food you eat, when you start to see that inside this context of price moving, man. So last night when I'm out, I wonder how many, I don't know how many, sitting there thinking there were a few. It was a lot of homemade shit last night, but there was a lot of corporate stuff in there. Coors Light, Tab, Tap, right? That was one. I interacted with that, man. These things are all around us. Look at that, $51. Wow, below value too, man. Nice. Let's look at this craft. Oof. This is one we talked about as a trade too, man. Easy target. Where price has been before, price can go again. So that was an easy target right there, right? At the same time, the RSI is going extreme. What happened last time it went extreme, right? That was the bottom, right around there. And so we've had an extreme low to an extreme high. And so as I'm building that out, I'm assuming it's going to do this, man. That was the one. Then price broke out above the green line, the 20-day moving average, right? We saw that right here. We saw that right here. And we got heads up on that. And it's below the gold line. Immediately, as you're flipping through charts, you're like, stop. That's who? Kraft. Kraft macaroni and cheese, huh? Well, that's kind of a big name. Has it ever stopped here before? We all look, and you're like, yep. Right over here. Actually, right on the edge of my timeline here. It had stopped here before. So boom, now I'm even double interested. I own it, pays a dividend. So we're below the green line. Now I go look and see, well, what's the true value on this stock? And if it's above this and it's below this, I know this is a given. The gold, and it's been there before. Bam! Right when we talked about this, I don't know if it was a YouTube live or in Discord. On the 10th, I put on there that Campbell's was breaking out. Which then what? Go look at Kraft. Go look at Kellogg's. Go look at. They're all in the same thing. Let's see. Did Kellogg's run? Not as big, but as we went through the charts of like General Mills, Kellogg's, these weren't big pullbacks. The other ones had a much wider pullback, man, which is what I would much rather trade. You get what I'm saying? Meaning this was a dividend stock. It had fallen below the 200. It had set up in a 1, and it's undervalued. That just looks like it's easier than that other chart that I was looking at. That rebound, that flip in advanced technical analysis, they call that reversion to the mean. Reversion to the mean, meaning price goes back to where it meant to be, man. Back where it was before. Hey, guys, I'm back. Look. Shit, it likes to be here. See that? It hangs out here, man. It's here all the time. So when it got under it, and it's undervalued, and it's below the gold line, how inconceivable is it that it could come back here? That, for me, is called trade ideas. That's called constructing a trade. So if I was looking for trades, it's not just a chart, how fast the first fucking chart I can find. It's like, can I construct a trade idea? Is there something that logically makes this thing work? Why would this go up? And you're like, well, it's undervalued. Okay, well, that's one reason. What else? Well, technically on charts, it's undervalued. And you're like, okay, that's good. That's 2. What do you mean technically? Well, it's below the 200-day moving average. Oh, shit, okay, that's 3. And then we go, look, well, what does so-and-so say about it? They say, well, it's undervalued by X. What does so-and-so say? They say it's undervalued by X. All right, we got a lot of X's lining up. And so as I look at that, and then I watch, and then I see Campbell's break out on the 10th, on this day right here. Campbell's breaks out. But this one didn't. But as I go look at the chart of General Mills, doesn't look like it's got a big swing. The swing's too small. And then I look at the chart of Kellogg's, not a big swing. So as I go to these are packaged good foods companies, right? These type of stocks. I'm like, boom. This one here, bam, there you go. That's thinking through a trade or a catalyst for something. I used to put this in the newsletter a lot. So I'll watch utility stocks. This is another example, XLU. And if you look on that chart that I posted on Instagram, if you're on my subscription feed, or if you trade with me on Discord, I put that board up, man. And look on that board. It says stocks that I want to trim. And it's all these ones banging the 70-something RSI. But if you look, there's asterisks by some. The ones that I have asterisks by means I don't want to trim them. One, like is AT&T, I think is going higher. I'm not looking to trim. I'm looking to buy on the next stage 1. So until then, just pay me my dividend. And I go to the next stock, and it's what? Like Campbell's. It's getting up into true value. Could it trade much more at a premium? Maybe, but that's a source of funds if I need them, okay? And then I go to Gilead. That's a source of funds. Merck, that's a source of funds. ConocoPhillips, that's a source of funds. Now Kraft is going into that space, right? What stocks could come up? Go look at Google. Now, I would buy Google with new money. I would buy Amazon with new money. I would buy Tesla with new money. I'm not selling dividend stocks to buy those, but I would sell dividend stocks to buy shit like Verizon. So would I sell my dividend in Conoco is 1.9%. I could roll some of the gains and the profits on that into what? Verizon. That's been on a stage 1. They have an opposite chart pattern. Verizon's dividend is now 7%, right? So when oil stocks were shitty, they had 7, 8, 9% dividend yields. Now it's like 2. But when they were crappy stocks, it was 5, 6, 7, 8%. Well, now that's Verizon. Look what happened to AT&T. So do you think it's possible that happens for Verizon? And that could be a trade idea. So you see it as a fundamental investment idea, but also you're like, this could be an arbitrage. I'm going to park some money in this. And when this hits and bangs and hits that RSI, I'm going to take all my money out. And there's people that do that too, man. And if you were really good at value, you would do it. And that's basically what I do, but I don't pull it all out. I keep trying to grow it. So we have been watching these utility stocks. They came way down. And if you remember, we took them down. We don't have no expectation to believe this thing's going much higher. It was the highest utility stocks have been in decades. Now, when they come down, the more they go below this yellow line, 200-day more moving average, the more interested I am. Because now, just off the top, it says below value. And you might go look, and the actual analysts say, no, technically, it's not really below value. And you're like, yeah, but it's technically below value. And are we in a time where this stock could be treated at a premium? A stock like Home Depot. So Home Depot can fall below the 200 and go look, and it's still trading at a premium. It'll be 20% overvalued. That stock runs at a premium. But it's not going to run at a premium in all environments. It's not going to do it in all environments. So that's when you start to get pullback, stocks like that get repriced. So a stock like that may only get 10% below value. It may not make it to 30, 40, 50% because people have a quantitative value on that type of stock. Typically, they call them, they got like the top 50. You could narrow it down. These are charmed stocks like the Apples of the world. The Dow Jones is a list of stocks like that, right? The dogs of the Dow are a list of stocks like that. But there's others. You could track Pepsi, things like that. But these stocks, this is Southern Electric, Duke, Edison. These pay a nice dividend. The reason they're coming down is now you can get a higher dividend at the bank. You can get 3-4% just sitting your money doing nothing? Do you want to own a bunch of utility stocks? Well, who do you think buys utility stocks? Fixed income investors, mostly, man. People trying to get yield. So yeah, as they fuck around with rates, this thing is going to get volatile. So we're going to get big moves, man. Up, down. And we need to take advantage whenever we see big drops below this yellow line, man. Wherever it's at, we need to pay attention. And as traders, I mean, if I trade the triple leverage fund, I'm trading for this $70 here. As an investor, I wanted to buy down there. I'm not buying anymore. It's fucking past my buy zone. As a trader, we're in the money now with a target of $37, right? And we are trading this. So I'm going to look to, get down to maybe half my position right there, thinking that at that time, we're going to be in a stage 3. And guess what? Utility stocks are fair valued now, so they're going to kind of be overvalued then. So up in here, they're going to kind of be overvalued, and they're going to have a reassessment. And in price, it's just a social agreement. And so people are going to get together, and they're going to look, and they're going to think, I don't know. How much do you think this Bitcoin's worth? I don't know. 100,000. Wait, no. I think it's more worth like 19. And that game will play out. And up here, they may say, well, fuck, I can get 4.5%, 5% at the bank. Let's do another leg down. And then utilities come back down. And we get out on the trade here. As investors, we just wait and watch, right, for the next stage setup. And so that's how I'm looking at it as I watch this. So for investing, I'm buying the Southern Electrics, Edison's, Dukes, these big, beautiful, big cap electrical companies that just spill off. Hold on. What the hell? Got attacked there. Somebody type something on YouTube for me. Anyway, big stage 2 breakout. Had a bot attack there on YouTube. I looked down, I'm like, what the hell? No worries, Carlos. No worries, bro. Just stay with the money flow there, man. And when you're ready, you're ready. But get the book, bro. Yeah, so this is UTSL. So as I watch this and I understand the concept of the money flow, that price, here's the deal. Price moves and it can only do 3 things: go up, go down, go sideways. And it can do that, and it'll do that to extremes. And the only way to see that is the way that I began to see it was in 4 stages. That while price could go sideways, up, sideways, down, sideways, it's really just going up, down, sideways, right? And all I began to see was this pattern. Now, there's a lot of people that think pattern trading is complete nonsense. They really are. And I think that about some things. I'm going to be honest. We'll pull up Tesla. Tesla's basically the same as what's happening here. Watch, we're going to see as we pull up Tesla. Big sell-off. We're under the 200, right? That just immediately means undervalued. Now, it may not mean undervalued once you go dig in and look, but I'm just saying visually on your eye, you'd be like, oh, undervalued, okay? Because look, it went under it. It gets drawn back to it. It's like I have this book. I keep talking about it, and I haven't released it, but it's From Chaos to Cash, and it talks about what I call the bread and butter here. It's where money flow is activated, like Wonder Twin power is activated way below what we perceive to be true value as just generically determined by this 200-day moving average. Now, that may not be the true. When you go do some actual fundamental analysis, you may use human reason to override the money flow, meaning, because nothing goes straight down and nothing goes straight up. They do stages. And sometimes the stages overall may move to the downside, and then it'll do another markup or run up, and then and then go back to stop, and then go sideways, and then go back down to the downside. Where's it at? I think it's on page 142 of the money. And we're going to look at Tesla in just a second. To trade the money flow trading system successfully, you must believe that markets trend. This is on page 142. Otherwise, not much point in placing trades using a trend following method. You don't need to know why they do, but you must accept that prices will move in one direction, either up or down, long enough for you to notice it, enter a trade, and exit that trade with a profit when the trend begins to change direction. It is generally accepted that all markets, stocks, commodities, even the currencies move in 4 stages. And then in the book, I say, here's a visual representation of this cycle. The cycle is fractal, meaning it works on a 5-minute chart to a monthly chart. The money flow trading strategy uses a daily chart, but the stages look and act the same regardless of the time frame. Man. I walked through this on here, man. I was looking at this today. The first stage is formed. I'm not going to read all of that, but... And what's funny, man, that's just the last couple pages. And it's really the whole thing. All right, man. Yeah, bro, get the book. If you get a chance, look in ticker Elon. Oh, is Elon? Okay. What's going on? What'd you say it is? ELON? I think there's no ticker by that, man. TSLA. Yeah, so as we look at Tesla, what are we seeing? If you remember, when we initiated our swing, we were watching it. And I was watching for this broken box here, meaning this stage 1 didn't make it. And it broke, and on that day, price came, if you remember, closed up in here, and this is when we bought. And I said, hey, this is back in the box. This is as close to the bottom as I can pull off with the money flow and still say I kind of followed it and didn't just go off my hunches, okay? And you can, and sometimes you get them right, and you're like, I'm going to jump the bottom because I think this is the bottom. That's fine, and you get some of those right. Same thing applies, though. I'm looking to catch a move, and we've got where price stopped before, right here, basically coming in where the 200 would be. I'm like, this is an easy swing trade setup. Tech is lagging the Dow. Then comes the SPY, or actually then comes oil, then comes the SPY. If you look at that picture I sent out, I ranked them, the big 7 that moved the wind, that moves the markets. And then I ranked them in order of strength right now. Dow being number 1, oil number 2, number 3 is the S&P, number 4 is the Qs, Bitcoin, or actually gold or metals, then Bitcoin and bonds last. And that's the order of rank or of strength of the stock market right now. Well, all of your stocks fall into one of those, okay? And that's the wind. Well, the Qs are above the 20-day. So I'm looking for these trades in the big cap tip growth stocks that are following, back into the box. Remember, an AT&T, before it had its big-ass move, it broke the box, came back in the box, and then ripped. That's what this is doing. Broke the box, came back in the box. Now it looks like it wants to rip. And we've got others doing that. Google's doing that. There's others doing it. Amazon could be setting up. I don't know about Meta. We got to watch it, though. And look, it could easily come up into here, man. 270, 310. And as a buy and holder, that's where you were buying. But as a trader, this is a trade idea. I just explained it to you that the technology's been lagging. Dow's been the strongest, followed by oil, then the S&P, then tech. And so as I'm watching the Qs, are the Qs above the 20? Where's the wind? And so as I look at the Qs, I'm like, all right, looks pretty good, right? I just need to know it's above the 20 and it's lagging. But what if the Dow and SPY hold up, meaning the dividend stocks, the industrial stocks, the consumer staple, all that shit, the consumer staples stocks, the finance, like all that stuff pauses for a minute. Maybe this plays catch up. And if it plays catch up, you're going to see these strong stage 2s run. The Teslas, the Googles, Apple's already turned, man, right? So as I'm thinking this thesis through, look, How far can it go? Can Apple run back to 172? I don't know. I don't know, man. But I'm not trying to talk myself out of a trade. I'm trying to follow the trade. And if I'm like, well, yeah, it's possible. It's done it before and it's doing it now. So let me in. I don't want to talk myself out of a stage 2 move up. I want to break out. I want to talk myself into one. And that's what we see playing out, man. How about eBay? Man, I appreciate you guys jumping on. Sunday service, I don't usually just look at tickers. I'm trying to cover what is the basic movement of price. And that's what this is, man. I love charts. I love stock charts. I love looking at stocks and, looking at barons and thinking it through and seeing what's going on in the world and witnessing this. Because a lot of people don't pay attention. They don't know that right there is happening. These points. And these points, if you have my book, The Money Folk, for the trading side of things, this is really what's up, man. I'm trading between these points. Right? And that's the money right there. And a guy could short that if you play that. I don't tend to do that much. I do a lot of position trading around this, but that's the meat right there. And the same on this side. Now, and we can finesse that, meaning with a little bit of skill set, with a little bit of following stocks like you would follow football or anything else, as you focus on it, you can begin to finesse that, man, which then it brings in this golden line, right? These things. And then the idea of values of companies. So as we begin to combine our brain with technical analysis, with the visual representation of stocks and prices moving, look at this beautiful. Look at this, man. Jeez. And look where the money flow says it's over. Right? Boom. But we already knew that, man. It topped out. There was your pivot point. Price went under the 5. That's start of your stage 3, man. And then we had a stage 4 decline. So as we draw this up here, we draw it down here. Price can only do 3 things: go up, go down, go sideways. And the sideways can be on the downside, and the sideways can be on the upside. And price is bipolar. It drifts up and then it drifts down, and it's always floating between overvalued and undervalued. And that's the game we play, man. And in trading, it's like, what's the true value of Tesla in a perfect world and everything is great and fucking unicorns? What is this worth? If you're going to write a check to buy the whole thing tomorrow, and they're going to be like, man, the company's worth like $340. Yeah, but it's only traded. Yeah, I know. That's why there's a market. And so as people watch and look, if they can get enough of these right, they get these right consistently, repeatedly, a lot with money, they can compound that money, and that's the game people play when they manage other people's money, is they're trying to do billions. And to do billions, you can't put it all into one thing, man, right? They're trying to spread it out, and they're trying to get ahead of this little chess match they're watching. And they have people all day sitting around like I had tried to do. Give me a trade idea. So as right now, I'm looking at nat gas. A lot of shit going on with nat gas, Europe, and all that stuff going on. It's had a pretty good correction. But why am I interested now? Well, I didn't catch the other run, but look what happened here. For the first time in a long time, we're below that now, the 200-day moving average. What did I tell you earlier? It's not always, but that's red alert. You just went undervalued. So you have my attention now. You have my attention. You're under the 200. That don't necessarily mean it's done going down, but it has my attention because, if it goes down, it has my attention even more because the come up could be bigger. Has it ever been here before? Yeah, man, a bunch of times, right? So now we just got to have some way of valuing this. And, I'm not an expert in natural gas, but I could do some readings. I could see, or I could just go, okay, there is a market, and I could rely on, here's my pivot point. Price has held it. We're basically possibly in a buy zone coming off the extreme RSI, and it has my pattern, right? I haven't entered anything, but as I watch this, and I'm like, Now what do we want to use? The UNG? Do you want to triple leverage it? You could use options. There are a lot of ways you could trade it. And how soon you think it's going to happen could be based on how you trade it. I mean, don't do weekly options if you think this is going to take 5 months. You know, if you're trying to be patient and build it up over time, you would position trade it, right? And so you would try to enter. This is what I would do. I would try to enter with this being right around in here. I'd be my stop loss. Or another way of doing it, I'd pick up enough that if it drifts down, I'm not going to worry about it. You get what I'm saying? Meaning I'm playing for the game up here. So if it wants to drift, I stop and I wait. And what am I waiting for? The pivot point again, and then 1 day, 2 day, 3 day, 4 day, and price to get above the 5. So this is what I'm watching, but this has been holding now for 1 day, 2 day, 3 day, 4 day. It's not the way I like it, but price has held it. And we're below the 200. So this is my thesis, right? What I'm saying is this, is this a trade idea? And as I go, look, I might read tonight on nat gas and see a little bit like, what's up, man? Why is it down? You know, just so I can get in the game. And that how much that storyline I buy could determine the position size that I want to try now. Like maybe everyone in the world that knows anything about nat gas is like, only an idiot would buy right now. Well, I need to know that, you know, and then I'm like, okay, well, let me be that idiot, but let me buy small because I don't know what I'm doing. You know, let me just be dumb and I'll go with the money flow. And I say that in the book, man, you got to be smart. You don't even need to know why, you know, but you could have took that shot up here. And we need to ask ourselves why that one didn't hold, why this one didn't hold. So see, as I'm talking, I'm trying to think up an idea. Well, I do that with sectors. So I'm always looking for a sector story. Can I create a sector story? You know, and if you can catch them, it works. We did it with H&R Block a while back and had a big win. And if you can catch these and get your story right, take it to the charts, put some money on it, right? Put some money on it and see that it works out, and then figure out your exit strategy and figure out how long you're willing to play it. And then you lay the money flow over the price movement and set your rules, man. Hey, I appreciate you guys listening.